Hello everyone. In this video, we will try to understand circular flow of income between two economic sector, household and the firm. Take this a firm and this is the household. We will try to understand how household economic sector and the firm economic sectors are interrelated with each other. So in order to run any firm, there is factors of production which are required. Factor input. These factors of production are coming from the household. Now, in the repayment of the factor of productions, firm will give payment to the household known as the factor payment factor cost. Firm will produce some goods and services that will be consumed by the household, and the household give money to the firm in order to consume those goods and services, and those monies are known as the private final consumption expenditure. So first try to understand factor of production in order to run a firm. Factor of production means like if we have a firm which produces bread, so there are some raw material which is needed in order to produce bread. There are some labor which is required in order to produce bread. There are some machines which are required in order to produce the bread. So these are known as the factors of production. Factor of production. They are coming from the household. Now understand types of factor of production and their factor payment. So first is the land, natural resource based factor of production. All the things which are coming from the nature in order to produce some goods and services are known as the land. For example, water, land. You can think many more example of natural resources, they will come under the land. And the factor payment for these resources given by the firm to the household is known as the rent. Because if a person will give something, some natural resource to a person in order to run that firm of that person, in response to that, in compensation to that land, firm will give the money, and that money is known as the rent. Now come another factor of production, labor. Human resource based input to production. He will get wages. In order to run any factory, there are labor which are required. So for the labor, factor payment would be the wages that will given by the firm to the household. Now another factor of production, capital. Long term man made factors of production, like building, machines. These things are required in order to run any firm. So the factor payment would be the interest. Means a person who is getting a machine from a person, let's say some household is giving machine to a person in order to run that machine, then this person will return the payment that will known as the interest. That is the factor payment for this factor input. The fourth one is the entrepreneurship. Means a person will come and combine all these three factors of production and run a factory. If he will be able to earn some profit, if he will be able to run profitably that business, then the factor payment would be the profit for that person, because he is taking risk to combine all these things and make a profitable business. So the factor payment for the entrepreneurship would be the profit. So these are the four factors of production in order to run any firm. And you can notice how firms and household, these two sectors are interrelated with each other in order to their income, in order to their expenditure. So this is the circular flow of income between two economic sectors. I hope you are able to understand those things. So thank you for watching.